Markets may look random, but beneath the chaos lies a hidden structure. Round numbers, clean, simple, predictable, are where battles are fought. Traders hesitate, institutions strike, and fortunes shift. These are psychological levels, and once you learn to see them, you'll never look at a chart the same way again. These round numbers act like invisible gravity wells, pulling in price, drawing out emotion, and exposing the pressure points of the market. They're where fear meets greed, where hesitation becomes opportunity. And now, with the ukutaLabs Psychological Levels Free Indicator, you don't have to guess where those zones are. It maps them out for you in real time. If you've ever wanted to see the market's pressure points before the reaction happens, this is the tool you've been waiting for. Let's break down how it works and how you can start using it to sharpen your edge. If you're already familiar with psychological levels and how to spot them, feel free to skip ahead to the chart analysis. Otherwise, stick with us as we break down exactly what they are and why they matter. Now let's dissect the logic behind these key psychological zones. In trading, psychological levels refer to rounded price points that naturally draw attention from market participants. Numbers like 100, 500, 1,000, or $50,000. These levels often act as invisible walls where price may pause, reverse, or break through with force. Why? Because human psychology plays a big role in the markets. Many traders and algorithms alike tend to place buy and sell orders at these clean numbers, making them areas of high activity and potential volatility. The psychological levels indicator takes this concept and makes it visual. It automatically plots both major and minor rounded price levels on your chart, adapting in real time to the current price. This helps you quickly identify where price might find support or resistance. For example, if you're trading Bitcoin and the current price is 42,500, the indicator might draw levels every 2,500 or 5,000 points above and below, giving you a framework to anticipate market behavior. These levels are especially useful when combined with other forms of analysis. They can provide high-probability entry and exit zones, help you tighten your risk, or guide where to place stop losses. If price approaches a psychological level with strong momentum, a breakout may be likely. On the other hand, if price hesitates or shows reversal patterns near one of these zones, that level may hold as support or resistance. Ultimately, psychological levels give structure to what can often feel like chaotic price action. By using this indicator, you gain a simple but powerful tool to understand where key decisions might be happening. Because when enough traders are watching the same level, it often becomes a self-fulfilling prophecy. All right, let's hop into TradingView. Drop the indicator onto the chart and check out the settings together. To get started, head up to the top of your TradingView workspace and click on the Indicators button. It's right in the main toolbar and is your gateway to adding powerful tools to your chart. Next, type psychological levels into the search bar. For this video, we'll be using the version created by ukutaLabs. Go ahead and click on it to add it to your chart. I'll also add the link for this indicator in the description below. Now let's quickly review the settings for this indicator. Let's begin with the anchor line settings. This line marks the nearest whole number level relative to the current price, giving you a clear psychological reference point. Keep in mind, the indicator does repaint. So, when price fluctuates between two major levels, you might notice the anchor line shifting slightly as it updates in real time. This anchor line also serves as the central reference point from which all other levels are calculated. Next, we'll take a look at the major and minor levels built around it. These are the lines that are plotted above and below the anchor line at set intervals that automatically adjust based on the asset's current price. You have full control over their appearance. You can toggle them on or off, change their colors, and adjust the line styles to suit your preferences. You can also choose how many levels are displayed on your chart, and we'll walk through those customization options next. As mentioned, you can customize how many levels are plotted on the chart, but this setting applies specifically to the major lines. Each major level is also paired with a corresponding minor line, giving you a more detailed structure around key price zones. The buffer zones setting lets traders add a shaded area around each plotted level, providing a visual cushion on either side. As we all know, price doesn't always respect levels with perfect precision. This feature helps account for that by highlighting zones in addition to the lines. We'll explore this setting in more detail during our chart analysis. Lastly, we have the custom gap setting. This allows you to manually define the interval between levels if you prefer a specific spacing. By default, The indicator automatically adjusts these gaps based on the asset's price range using a built-in configuration. Here's how that breakdown works. For commodities between $1 and $99, major lines are plotted every $1 and minor lines every 50 cents. For commodities between $100 and $999, major lines are plotted every $5 and minor lines every $2.50. For commodities between $1,000 and $9,999, major lines are plotted every $10 and minor lines every $5. Between $10,000 and $99,999, major lines are plotted every $100 and minor lines every $50. And lastly, for those rare commodities that are greater than $100,000, major lines are plotted every $1,000 and minor lines every $500. And for all the forex traders out there, yes, this indicator works perfectly for currency pairs as well. We'll take a look at a couple forex examples during our chart analysis to show you how the indicator performs in those markets. With the custom gap setting, you can fine-tune the levels to suit whatever market you're trading, whether it's crypto, stocks, forex, or commodities. Now that we've gone over the default configurations, it's important to note that when using the custom gap setting, you only need to set the spacing for the major lines. The minor lines will be automatically calculated from that value. To revert back to the default settings, simply enter a value of 0 in the custom gap field. Now that everything's set up, let's jump over to the charts and see the indicator in action. To get started with our chart analysis, let's take a quick look at the buffer zones feature. It's common to see price slightly break through a level without any real follow-through, and that's exactly where buffer zones come into play. They add a layer of tolerance around key levels, helping you better confirm whether a zone is truly acting as support or resistance. For example, if we zoom in on these two bottoms, you'll notice that in both cases, price dipped just below the psychological level before reversing, highlighting how buffer zones can help identify these subtle but important moves. Once we enable the buffer zones, a shaded area appears just above and below the level, making it much easier to visualize that zone of potential support or resistance. Now, zooming in again, it's clear that both dips held within the buffer zone, indicating that buyers were stepping in and showing interest around this area. In contrast, if price had broken below the lower edge of the buffer zone, it could suggest that buying pressure isn't strong enough to absorb the selling activity. This kind of breakdown often signals a shift in momentum, potentially pointing to a deeper move to the downside or a larger trend reversal in play. Just like we see here, price broke below the buffer zone, briefly retraced as buyers attempted to regain control, but ultimately, selling pressure took over and pushed the market lower. Of course, like any strategy or indicator, it's important to remember that nothing is foolproof. Even when price reacts to a level or zone exactly as expected, there will always be exceptions and false signals. Through our own backtesting, we've found that patterns like these tend to occur more frequently with certain commodities than others. That's why we always recommend doing your own backtesting before applying any indicator or strategy in live trading. Remember, there's no magic bullet. No tool will make you a millionaire overnight. Consistent success comes from understanding the tools, refining your approach, and staying disciplined. With that in mind, all of our indicators are thoughtfully designed to bring clarity to the markets and help cut through the noise. In fast-moving or unpredictable conditions, it's easy to get overwhelmed by conflicting signals and constant price movement. Our goal is to simplify what you see on the chart, so you can focus on what really matters, making more confident decisions and reduce the chaos that often comes with active trading. Next up, we're looking at Tesla on the 15-minute chart. One of the key strengths of this indicator is how it brings structure to what often feels like random price movement, clearly highlighting support and resistance levels that might otherwise go unnoticed. If we disable the indicator for a moment, the price action appears to bounce around with no clear logic or structure, making it difficult to identify meaningful levels. However, once we turn the indicator back on, it becomes immediately clear that price is reacting to key whole number levels. What initially looked like random movement now reveals a pattern, price consistently respecting these psychological zones. This visual clarity is exactly what the indicator is designed to provide, helping traders spot structure in what might otherwise seem like noise. Now let's shift over to Bitcoin on the 30-minute chart, another great example of how price reacts to these psychological levels in real time. With the psychological levels indicator applied to your chart, it becomes clear just how often price is attracted to these key whole number zones. These levels tend to act as magnets, drawing in price and creating areas where strong resistance, sharp reversals, or periods of choppy consolidation often occur, especially when price gets trapped between two major levels. Recognizing these zones can give you a significant edge in anticipating market behavior. To wrap up our chart analysis, let's take a look at a couple of forex examples, starting with the CAD-USD pair. What's interesting here is that even across different asset classes, including commodities and currencies, these psychological levels continue to hold their relevance. Price behavior around whole numbers remains consistent, showing how these zones can act as key areas of support, resistance, or consolidation, regardless of the market you're trading. For our final example, we're looking at the GBP-JPY pair. As you can see, the default settings don't quite fit this pair. Psychological levels appear too far apart to be useful. This pair requires a smaller custom gap to properly align the levels with price action and reveal the key zones more accurately. Let's quickly open the indicator settings and make a quick adjustment. For this pair, setting the custom gap to 1 should provide a much better fit. Keep in mind, you might need to experiment with a few different values to find the one that best aligns with the price action of the pair you're trading. Much better. Now the psychological levels are plotted at more appropriate intervals, providing a clearer view of the key price zones. In conclusion, the psychological levels indicator offers a simple yet powerful way to bring structure and clarity to your trading charts. By automatically plotting major and minor price levels based on rounded whole numbers, it helps uncover key zones where market participants are likely to react. Whether price is finding support, facing resistance, or bouncing within a range, these psychological levels often reveal the hidden forces shaping price action. Throughout this video, we explored how the indicator adapts across different markets, from stocks like Tesla to crypto with Bitcoin, and even forex pairs like CAD-USD and GBP-JPY. We showed how to adjust settings such as custom gaps and buffer zones, allowing you to fine-tune the indicator for any asset. When configured properly, the tool not only highlights meaningful price zones, but also helps you avoid false signals by accounting for the natural wiggle room around key levels. As always, no indicator is perfect or predictive on its own. It's essential to combine tools like this with your own analysis, risk management, and backtesting. But when used thoughtfully, the psychological levels indicator can become a valuable part of your trading toolkit, helping you reduce noise, improve timing, and trade with greater confidence. Thanks so much for watching. If you found this helpful, be sure to add the psychological levels indicator to your chart and try it out for yourself. It's a simple tool that can bring real clarity to your trading. Let us know how it works for you in the comments below. And if you enjoyed the video, don't forget to like, comment, and subscribe for more trading tips and tools. As always, happy trading!